This is going to be an exciting and fun episode, and so we're going to talk about touchy subjects, and we've got a special guest here with us, but let me first bring in the host of your show, Glenna Hum. Glenna, how are you today?
I am doing great, Matt. How about yourself?
I am awesome. It's another beautiful sunny day. So we got kind of a fun different take on business finance. We've got a business finance expert with us as well as a CPA named Anthony Bandura. So can you tell me? Let's bring Anthony in and just Glenna, how did you guys meet and what's your relationship?
Well, I've known Anthony for several years, and I've also heard of a lot of people that use him as a CPA, small businesses, and they just love him. He knows his stuff. He definitely is able to guide you down the right route of how to handle your business as far as finance is concerned, and he's also my own CPA. So we kind of have several different things, and we also I shouldn't say die together about 3 days a week, but we are both in Iron Tribe too. So I've known him for quite some time, and he's a fantastic person, and I'm really excited for him to be able to share all of his information today.
Awesome. Anthony, how's it going today, by the way?
I'm fantastic. Thank you guys for having me. I really appreciate it.
Yeah, and we're excited. So I wanted to point out a couple things. We're going to talk about a lot of stuff. We've got some fun things. You've got some stories to share, and there's a lot of cool content, I guess, to get into. But I wanted to mention a couple things first. So number one, to learn more, like get more details about some of the things that Anthony's going to talk about today, you can actually go to his website, it's banduracpa.com/resources. If you go to that resources page on Anthony's site, that has got a ton of downloadable documents that he's put together that has a ton of valuable information. So a lot of the questions that you might have might actually be answered already by some of those documents, and then if you get more detail there and you have follow-up questions for that, then reach out to Anthony directly and possibly look at scheduling an appointment with him to speak further about your specific business, because obviously there's differences for everybody. And then for those of us that are just joining us live, I want to thank you so much. Part of the reason that we do these events live on Google Plus is so that right here on the event page you can actually submit your questions. So if you're on the Google Plus event page right now and you're watching the video, right below here you can type them in as a comment, or you can use the Q&A app, which is that little button in the top right-hand corner of this video. So you can actually click that, type a question in. I'll be happy to bring it to Anthony while we're on the call today. So, and then if you're watching the replay, subscribe right here to the Fusion One Marketing channel on YouTube so that you get notifications on all future videos as they come out. So, with that being said, the little business out of the way, now we can move on to the fun stuff. So Anthony, let's get into it and just talk about from your perspective. I mean, you have people that are coming to you like, what's your average client and the situation when they're coming to you where they feel like they need to get their business finances in order?
Sure. So 75% of what I do is take care of very small businesses, mostly with their monthly accounting, their bookkeeping, let them know how they're doing. Most of the time people come to me when it's already done. You know, they show up in January and their entire year of finances is already done. There's nothing we can do to fix it at that point in time besides try to mitigate damages, try to find extra things that we can do to have some write-offs. So it's just important to try to meet with somebody before you get started or very early on, because we can just mitigate those damages, and it costs a lot less to fix it in the front end than the back end. You know, I've had luckily a lot of new clients coming in who are new businesses who are just getting started, and they made the right choice of, hey, let's go talk to an accountant and an attorney right away and make sure our ducks in a row in the beginning, versus in January when they say, oh, I didn't know I couldn't write off my haircuts, or whatever else that happens. So, I mean, it might not happen for Matt because he has to look good for his presentations all the time. So that's what he does. But for people like me,
if I can figure out how to write up a trip to Express, I will be the first. I will be the top of your client roster.
Yeah.
All right.
All right, do me a favor real quick. If you can, I think your microphone is kind of rubbing against your shirt a little bit. Yeah. But so you've got, I mean, one of the topics that we're going to talk about is like touchy subjects. So what are some of the things that people have, I guess, maybe mistakenly tried to write off, or they even successfully tried to write off? What are some of those unique things?
Well, as always, talk to your accountant and your attorney before you file your taxes.
Big disclaimer.
Your situation might be different than everybody's on this videos, and I mean, I did 180 tax returns this past year, and every single one of them was different in some kind of way. All right, so one of the favorite things that people come in and say is, everything I do is about my business. I go to church, and it's about my business. I go to the supermarket, it's about my business. So I'm writing everything off. And, you might get away with it on your tax return until an agent shows up and wants to audit you, and then it's just going to be ugly and nasty. So there are obviously a lot of gray areas and a lot of fun things. Like I told Glenna the other day that she had a big smile on her face about, there was actually a court case the other year that a stripper was able to write off augmentation, and it cleared out. The IRS rejected it, but the tax court said it's okay. So, those are kind of fun things. And then also, if you're a plumber, you have a truck that looks like a plumber truck. You're not going to take that thing to the beach to go on vacation, for most people. But if you're just commuting to work every day, you might not be able to write off that fancy car as a tax write-off. Mileage might be the better way to go about it. So.
Yeah, let's get in, since we're talking about write-offs,
sure.
Some things that, we joke around with our pals and say, oh yeah, I'm taking a vacation, I think I'm going to write the whole thing off. Let's start with some of these specific things that I'm sure you hear all the time, and it may be ludicrous, but at the same time there might be things that you could write off. Let's start with vacations. I know everybody's thinking, oh, I'll take my whole family down to the beach and it's going to be a complete tax write-off.
Right. So we'll start off with an example of one of my clients. It's a partnership. There's 3 guys who have a business. They went out to Vegas for a business meeting, and they actually documented every day their 3-4-hour business meeting that they had, their retreat, right?
Right.
The IRS had no issue with that part of it. What they did have issue with was that they also flew their wives out, and they didn't allow that as a deduction. So they had to write a small check for that, but the actual trip was fine. So let's say I have a client at the beach. That's 4 hours away for us when we drive in a very rapid manner. And, if I drive down there the night before, get a hotel room, and meet with him the next day, and, like 2 o'clock in the afternoon, I need to prep, and then say that next night and drive back home the next day, then I would count that as write-offable. And if my family goes along, there's 6 of us. We have 4 kids, and I can write off the mileage both ways.
Okay.
I can write off my portions of the meals, and if we are all in one room, I should be able to write off one room for both nights. I can't write off their meals the entire time, but we can have those write-offs.
Yeah, so you can write off exactly what you would have spent if you had gone by yourself, even if you're able to combine certain things. It's not like you have to split the hotel room, because you would have needed one room by yourself regardless.
Right, exactly.
But if you get 2 rooms and it's just for family, then that second room.
Split it up. Right.
Yeah, exactly. Okay, that makes sense.
And then I'm sure documentation is one of the most important things to make sure that you're not just making things up. I'm sure the IRS is going to want proof if they come knocking at your door.
Right, like there's 3 guys, they had a journal of what they did.
Yeah.
I have a restaurant client, they went to Spain for a research trip.
Mm-hmm.
So every day they kept a food log of what they ate, what they thought was in there, whether they liked it or not, and they were able to do that. Sadly, there's no food log that I can keep for a trip to Spain, but they're able to do it since they were a restaurant. And like I said, all situations can be different, and it all depends also on how good you feel about it. If an agent sitting across the desk and you or your representative has to explain it to them.
Right.
If you feel very confident about it and you're willing to fight for it, then there's a lot of gray area sometimes, but it's always safe. It's always good to be safe, right? And to reach your risk level.
I like that. And all of our risk levels different, I'm sure, depending on how much you're willing to put out there.
Right, exactly.
All right, we've got vacations covered. Another one that I always hear is, hey, let's all go out to eat with my friends and let's have some drinks, and because I'm going to write it all off. It's no big deal. I mean, how legit is that?
Well, I mean, it depends on who they are. I mean, like I went out the other night with 2 clients, and they are my buddies, but they're my 2 clients, and we talked about business. And if someone came and asked me about that business write-off, I would easily be able to say, well, I'm sure we talked about rental houses, we talked about the financial planning, and the other things we talked, and the actual businesses that we talked about, and I would feel confident about that. So you better have a very good reason, not just we're just going to go hang out. Like
Right.
the person's never, I can show the agent where that person is on my client list or on my prospect list that I am trying to have that person as a client. So you got to be very confident in that. Now, if Glenn and I go out for drinks after Iron Tribe 3 times a week,
if we can crawl out of there.
yeah, then it might be a little more questionable, right?
Yeah.
So if you hit up Jamba Juice after a workout, it doesn't automatically count as a deduction?
Right. No,
Okay.
no, it does not. No.
Well, that's what about, like, you have obviously documentation. I mean, you can prove these people are clients. So if an agent came to you and said, look, this dinner, this $500 dinner is a little out of line, clearly that's not, you can actually go back and prove they're clients. What about when you're trying to wine and dine people that you have really no provable connection to because they're not clients yet? You're trying to win them over, or maybe it's just a business relationship with someone that's a potential referral partner. They'll never be a client, and you know that going in, but you're hoping to build that relationship.
Right. So you were saying, like, Glenn and I are both in BNI. We both firmly believe in it. And, we go out with people all the time to better our relationship, to help they refer to us. So I can show that. And I have a Google Calendar that has every single one of my appointments on there that I can show who I met with. And I have notes on what we talked about. So if I have an end-of-year tax party and I invite 20 people and it's promotional and it's kind of open, I put it on Facebook, hey, come on out, first drinks on me, then that's all write-offable because I'm opening it up to the general public to come and wine on my dollar for promotional purposes. So that, if someone has a big company barbecue and it's open up to tons of people, then that's promotional. So that has actually the 100% write-off versus that 50% write-off that our normal meals and margaritas get us. So.
Right. And you and I have had the discussion of people say, oh, I'm going to go buy this because I can write it off on taxes. And you've told me, don't just go out and buy stuff just in the premise of writing things off on taxes, because it may not work out that way, or I guess just because you think it's for business doesn't mean it's going to be a write-off.
Right. So a business expense has to be normal and necessary for a business to be able to write it off. So my cell phone, I don't have an office phone. My cell phone is my office phone. So that is a normal and necessary expense for me. Whether I have an iPad or not, that really needs to be a cash flow purpose on top of whether it's necessary for my business.
So let's say if you use that to take payments with Square, then that would be very easily to justify versus whether you're just using it to surf YouTube in between appointments.
Exactly, right. And I would never do that. So,
no. I have no idea what YouTube is. I don't even know why I mentioned it.
I don't know. That's exactly right. So it's one of those funny things that people show up and it's like, well, my accountant told me to go buy a truck last year for my company, right on December 28th. How do you feel about that? And is it necessary? Is it good for cash flow purposes? Would it save enough taxes to justify it? Those are the kind of things that need to be looked at and planned, because so if I go buy a $20,000 truck at Toyota in December, well, I give them $20,000, and if I'm in the 25% bracket, then I only write off $4,000.
Get that calculator head out.
I know. Dang it.
Well, you're not going to write off as much as you'd hope to.
$5,000. So you would only be able to write off $5,000 of that. So is it worth that to you? Because I'm giving away 75%, and keeping 25%, where is it better to keep 75% and pay the government 25%?
Gotcha. Yeah. Yeah. Wow. I'm glad you're the CPA.
Yeah, you do math in my head in pressure situations, but it's okay.
All right. What about? I mean, home office is a real common one. I mean, we're all. I'm working from my home office, so obviously I'm interested in this one. So, Glenda, you are too.
Yeah,
Perfect.
a lot of people we know do.
Yeah. So let's get into that one a little bit.
All right. So 15 years ago, it was a brand new thing to have a home office. It was not common. The internet, your cell phones, your computers weren't all synced, all talking. It was not common. So it was much more of a red flag back then. Nowadays, there are tons of people that have home offices. I mean, you have to have a designated room that if an agent walked in there would go, this is a home office. It's not your dining room. It's not your spare bedroom. It is a true home office, and it looks like an office that you have at home. So, I mean, I started as a home office, and I feel very confident that it's write-offable because it was a room that was designated as my office. It has a desk, it has a computer, it has a scanner and a printer, all my normal stuff that I have at this office, that if they looked at both of them, they would say, he does work here. So,
well, and dumb question. I mean, I know a lot of people who maybe have a desk in their bedroom because they don't have a specific room just for their office, but they use their bedroom for their office. I mean, that's probably really sticky. I don't know. Can you write off? I mean, where does that fall?
If it's like in your kitchen or on your dining room table, on your coffee table, in your bedroom, it is most likely not going to fly. Now, all these kind of things depends on the auditor that shows up and how they feel about the hair that day. If they, if they're feeling very lenient and they, they feel very good about life, then it might fly. I mean, there's been audits where I've sat there and it was about stuff that I wasn't involved in, and I'm just representing the person, and I was like, we're in so much trouble. I mean, this is not going to fly. And it flew, and it went away. And then I had another audit where it was stupid. It was very clear, and it took forever to get it through. I mean, it was such an easy thing. It should have been fine, but the auditor was not happy that day and did not want to let anyone get away with anything.
Oh, man. Yeah.
So, all right. So here's a specific question.
Okay.
So, and I know someone that does this, and it's not me. Let me just bring it back.
I was gonna say.
'Cause I have a very nice setup here. But I do know someone that she's. I mean, she does most of her work from her laptop, right? She sits at the kitchen table, exactly like you said. But in the house that she owns, in the basement, there is a desk. It does have a printer and a scanner on it, and it looks like you could theoretically work from that desk if you so chose. So I would think that would, like on a good day, it sounds like something like that would fly, even if you don't typically use it, or even if your office is on the go and mobile and it's really just you and a laptop. If you could set up a space where it looks like you could work from that space, that would probably count as a home office, right?
I would tell you to consult with your accountant and your attorney and make sure you are very confident and comfortable defending that if the agent is sitting across from you at the table. If you're going to break down and cry because the agent's sitting down in front of you and you have to explain it, it might not be a good gray area to approach.
So if you're gonna crack like a witness, okay, all right, gotcha.
Hey, and still on the home office subject, what kind of things can you write off if you have a home office? I mean, I've heard people trying to write off electricity bills. I don't know. What are some of the things that you see are common that people can write off?
All right, so how this works is you have the home office square footage, then you have the whole square footage of the house. So let's say it's a tenth of your house is the home office. So you would be able to write off a tenth of your mortgage, your rent, not both, your utilities. If you had a designated phone line to that house, that it was a separate line than the house, then you should be able to write that off. If you have clients coming to your house to meet with you on a regular basis, you need the house to look nice. I mean, why can you not write off a percentage of the yard, the maintenance guy, and the cleaning service? I mean, I feel very confident about that.
Must be
Fine.
nice.
I never thought about that one.
Yeah, me either.
Yeah.
Thanks.
Time to hire a housekeeper and get some people coming over to the house.
Well, I mean, but you're going to have to, justify that they're coming. If you have the house cleaner come once a week and you have people showing up twice a year, that might not work out. Yeah. But if it's a regular, people are walking in your house every other day, then it's much more justifiable in that situation.
Gotcha. Another thing that I hear people talk about all the time, and it's very common because, I mean, you have 4 children.
Yes.
Almost everybody I know has children. Daycare. I mean, they say, I have to have daycare to be able to go to work. What are your feelings on that?
Well, there is a write-off for that if both people or if it's a single parent, if they both work. There is a write-off, but it's really not that much money. I mean, because if you're making $100,000 combined income in the household, then it might just be, $500, $1,000, and there's a whole mathematics aspect of it, but it's not dollar for dollar deduction.
Yeah, we're talking about just lowering your adjusted tax income at the top, right? It lops $500 or $1,000 like off your income, which is nothing.
Actually, it's down below, but yes.
Okay.
It writes off on on the tax part of it. So yes.
And another one of the you and I got some chuckles out of, but what about clothing? I mean, we all have to wear nice. Well, most of us, depend on what your field of work is, but you have to have the right clothing to go on appointments, to meet with potential customers and such. How does that play in? I know you mentioned haircuts. I guess it would kind of be the same type thing, but.
It is very much the similar kind of thing. If you are a car mechanic and you have one of those uniforms that looks like scrubs, right? Scrubs is a good example. You're not going to wear scrubs to the fancy restaurant on a normal occurrence to go eat. So it's a good write-off there because scrubs normally is not what you would wear day to day, except if you're in college, right? So that's a acceptable write-off. If you're have to rent a tuxedo for a special occurrence or something like that, that's business related, then you should be able to write that off. But if it's just a suit, well, you can wear that to church. You can wear that to the nice restaurant. So that kind of write-off is just a normal and necessary item of clothing that you would have, and you would be choosing whether you spent $3,000 on a suit or $200 on a suit, and the IRS would not allow that normally. So it's, I guess it's really touchy. The yoga clothes used to not be the thing to wear all the time, right? So yoga instructors used to be able to write off, or workout clothes, right? They used to be able to write that off a lot easier. But now that's kind of normal. And I wear workout clothes every chance, I would be wearing it right now if I didn't have this interview. So
we didn't mind.
Yeah. Glenna knows what I work out in, so that's probably what we good. But you need to look at that. I mean, that's one of those things that needs to really be looked at, whether it's acceptable or not.
Well, and speaking of yoga, I guess and working out, health and wellness. I mean, people talk about, well, if my employees are healthy and happy, then if I can pay for their massages or I can pay for their gym memberships. How does that play out?
So I'm a single owner for my business. I can't say I have a workout program for my company, and it's just myself going. The IRS probably would not like that too much. If I had 10 employees and I paid for everyone's membership, that included my own, then that would be a lot more favorable as a write-off.
Gotcha. Okay, that makes sense. Well, and let me ask you this. We're talking about all these write-offs, and you said you can skirt the issues a little bit, and I guess it's how much are you willing to put yourself out there. What happens if you claim some things and you do get caught and it's not good and the IRS comes knocking? How do you handle that? What would you say is the best way? I mean, I guess if someone calls me from the IRS and wants to do an audit on everything I've done in the last 3 years, what should I do first?
Well, the very first thing is you call your accountant and set up an appointment the very next morning after you've opened the mailbox and say, I have a letter to give to you and we need to clear this up. You're going to have to justify what they're asking for. So if it's I had one this past year that he was open only 12 days and the state was asking for proof of all of his revenue. And we had to print out his daily sales sheets and send them on in, and it cleared up. It was fine. It was correct. So you're going to have to be able to justify, and normally what happens is they're going to write you a letter first. They're not going to call you first. They're not going to, and even if they come and knock on your door, Glenna, you call me and say, my accountant needs to get here, and then we'll talk. He is my representative. So you don't have to talk directly to the IRS auditor ever. You can use an attorney or a CPA in that regard, or an enrolled agent. So we're gonna have to look at the letter and see what they have to, what they want proof of, and what questions they have, and come up with a justification to provide to them. Mileage, I know we're probably going to get to, but I had a client who had a letter say, I need proof of all of your mileage. My client was like, fine, here's my spreadsheet. We were able to print that thing out, mail it, and it was done within 2 days. That's how it should be. But I know we'll just jump right into mileage. If you put on there 10,000 miles this year, last year, the year before, there's no way you truly drove 10,000 miles. I mean, I guess there could be, but statistically, there's probably no way that you could have driven 10,000 miles exactly. If you did, you better have very hard proof and very confident about it. And you need the date, the beginning odometer, the ending odometer, the business purpose, who you met with, what you discussed. That's what needs to be on there to be able to justify mileage. I have a lot of people that show up and say, I drove 10,000 miles. Is that correct? Can you make sure that's the exact figure, because that's a big red audit flag if it's a rounded number like that. That comes up a good bit.
Well, and it's funny, I've had emails and texts for the last couple of weeks when people found out that you're going to be on the show, and people were saying, ask him this, ask him this. So these are, one of the big things was sales tax. And I know you probably have a big disclaimer you want to put on that one, but when do you know how to charge sales tax? And I mean, how does that fall into, I guess, your everyday accounting for your business?
Well, sales tax is an animal onto itself. Every state has different sales tax structures. I think I read yesterday there's over 900 different sales tax entities in the United States. So, I mean, for where I am, I'm in Hoover, Jefferson County, and Alabama. So if I was selling a product at a restaurant, I would have to file sales taxes for Hoover, Jefferson, or Shelby County, and Alabama. So every situation's different. I mean, I go into a restaurant, I know what needs to be done because I have a lot of restaurant clients. But then I have a client that's about to start selling real tangible goods online all over the country. And we're going to have to look at each one of those states' rules to determine how sales tax should be done for it. So, the one big sticking point right now that's coming up a lot is photography businesses. So someone gets especially in Alabama. I know every state's different, everybody's different. But here in Alabama, when you are making that disc or you are uploading pictures, you do work on those pictures and you hand them over to the client in some kind of way, that is a sales taxable event. So you have to file sales taxes for your city, your county, your state for that. There's actually some very fancy, expensive attorneys fighting that right now in the state court. But it's something that has to be looked at. I have a furniture store that has to have a business license in, I think it's like 60-something cities and counties, because they deliver furniture to all these different places, and that every month they have to file sales taxes for each one of them.
Oh my gosh. Wow. And today you're talking about your friend that's getting ready to sell things online. There's so many
Right.
people that provide things via the internet these days, and I'm sure those are probably case by case basis too.
Oh yeah, for sure. I mean, it's like I said, it's best to ask the CPA, and a lot of times if the CPA doesn't have that kind of client already, I mean, I call the state all the time and say, how is this sales taxable? And we had one situation where I was really hesitant. I thought, it might be, we might have to, collect sales tax and pay it. But we got an attorney involved, and they were able to write it off a different way, and now we don't do sales tax. So that's a big, huge thing that shocks a lot of people when they get into business. And
Yeah.
they go,
Well, yeah, because we talked about kind of like the people that are coming to you tend to be the ones they've already started their businesses, they're already going well enough that they have revenue coming in. Maybe they're doing really well, and now they have so much that they're worrying about brackets and how much should be flowing to them, should they set up a different entity and all this stuff. But if there's any doubt, like if you're thinking of starting a business or starting an offshoot business where there might be any type of physical product involved or a service that ends up with something where you're actually handing something over to the client, I mean that could make or break your business model, because if you figure out you have to charge sales tax on it, then that might be your profit margin right there. It might not even be worth it. The business itself might not be worth getting into.
Well, the sales tax is just about always collected on top of whatever the cost is. So if a restaurant's selling a $10 hamburger, then you collect sales tax on top of that. So it's never truly the entity's money to begin with. But one of those, if it's a restaurant, they have a static location, it's going to be very straightforward who they pay the sales tax to, right? The furniture store has to have someone on staff for 2 or 3 days that accumulates where everything went, look at the computer system, and prepare sales taxes that way. So that's where it might make or break you, is that if you're not willing to do it, if you're not willing to prepare it and figure out how that works, then you're going to have to pay someone to do it for you.
Yeah, and I mentioned that, like, I know there's a couple of this, a good friend of mine, they're in they've been in the like vendor trade show festival business for a million years. They were the ones they bought, like, you ever seen the gourmet almond roasters? They were the ones that bought the second machine imported into the U.S. from Germany like 30 years ago. So they have a side business that sells physical products, right? Well, that physical product does extremely well at one price point, and you go up $1 from there and you start losing sales. So what they do is they actually they charge the customer the exact same amount, and then they just eat the variable amount of sales tax. They just take it out of their own, because if they tried to raise the price or try to quote the price and then charge sales tax on top of it when they're dealing with a lot of cash, it would break their business.
Yeah.
In our state, you would actually have to have a disclaimer on your sign, like if you're selling at a festival, on your sign that says sales tax is included. Like, you would have to be very specific in that, because if you don't lay that out very clearly, then the state will say, no, that's the number we're collecting sales tax on.
Oh, yeah, nice.
Yeah, you don't want to be surprised by that after you've been in business for a year.
Mm-hmm.
and they want their money, huh? Talking about paying taxes, a lot of people talk about, should I pay yearly? Should I pay quarterly? What should be the decision, or what makes that decision for you in your business? Do you have any advice on that?
So for the IRS, the rule is, this is personal taxes, right? So this is for your personal 1040 tax return. If you owed $1,000 last year and you're going to owe $1,000 this year, then you're supposed to make quarterly estimated taxes on this upcoming year's tax return. That is what they like, and if you don't do it, there is penalty and interest. Now, the penalty and interest, if you pay everything on April 15th, shouldn't be painful. It shouldn't be, thousands and thousands of dollars if you made $100,000. But if you don't pay it for multiple years, obviously it's going to multiply and it's going to be huge. So, you're going to have to figure out whether cash flow wise, whether you want to be making those payments every quarter, and or you want to save the money and just pay it on April 15th. That is up to the individual taxpayer and how that, how you approach that.
And say taxes are due on April 15th. I mean,
Yeah.
What about if you're surprised and you don't have the money? I know you shouldn't be surprised if you're done everything that we've talked about, but I'm sure that people have that situation. Are there any alternatives for them, or are they just in trouble?
Well, we can easily set up a payment plan. The IRS has a very good system where you can mail in a check on a monthly basis, or they can just draw it from your account if you want to go that route. And but it is a lower interest rate if you have them draw it out of your account. But then they know your account number, and that's kind of scary, right?
Yeah.
But either way, you can set up that payment plan and start making payments on it.
Oh,
But I guess the problem is that once you start making those payment plans, right? Well, great. But then April 15th rolls around pretty fast again, and you're going to owe that money. So it's very good, especially if you you change jobs, you get married, you create a new job, you create a new business that's doing well or not doing well, to consult with an accountant and do estimated taxes. I mean, you would come in, Glenna, and we would sit down. I think we have an appointment scheduled soon, right? And you would come in, we would look at your finances, see how they're going, we would plug in the tax software and see what it's estimating your tax return is going to be. And we let you know that number, and it could be a joyous moment or it could not be a joyous moment. And we go from there. But if you showed up now, it's the middle of November, right? I mean, you would have 4 months to save for that dollar amount that you're going to owe on April 15th. So it's a lot less painful if you know now versus if you know on April 14th, and you have to come up with $20,000.
Yes.
Or whatever that number is.
Most definitely. I mean, that's a good problem to have because you were making money, hopefully.
Well,
but at the same time,
right, yeah.
you may not have that lump sum just sitting right there to be paying out. Well, I know something that you and I were laughing about. It's not a laughable thing, really, but it's something that I would like you to touch on because you have a really neat insight on. I know we're talking about businesses that have already been underway and they are making money and such, but we were talking about partnerships, about there really needs to be a plan in place. Tell the folks what we were talking about as far as partnerships go and how you should set those up and be prepared for.
All right, so if you're a single owner LLC, and my attorney friends aren't going to like this, but if you're just doing a very simple business, LegalZoom might not be a horrible way to go about it. But I know a couple of attorneys that aren't going to be really that much more expensive than LegalZoom, and they'll get it right the first time. But a partnership is a totally different creature. As I like to joke, is you're married to somebody without all the perks. You spend more time with them awake than you do with your own spouse. And I'm very firm believer if you need to get an attorney involved and a CPA to explain how it all works so you have a good understanding, and you get like a business prenup. You make sure you know, even 30 years from now when the business collapses, how everyone's going to be paid out when people start leaving. I had a law firm that had 4 partners. Someone started leaving. They didn't have a breakup agreement. A dissolution agreement. They didn't know. They had to negotiate when they weren't liking each other on how someone was going to be paid out. And that's not the time to be negotiating something like that. You want to be negotiating, just like contracts, you want to be negotiating a contract when you like each other, not later on. Yeah. And then, I had one client who, they had they had 3 partners. It was all based off of how many widgets they sold. And however many widgets they sold, not the dollar value, but the quantity is the percentage of revenue they got. But they're going to split expenses equally. Well, okay, but there's a lot of math involved there. What if someone doesn't meet their numbers? What if someone, is truly knocking it out, but they're selling $100 widgets versus $1,000 widgets? How does that all work? Let's get all that laid out now. Let's get clear, defined roles for each person, because you don't want two people pulling all the weight and one person playing on YouTube all day long in the office.
That
while
YouTube
the
again.
money comes in. Yeah. 'Cause that would never happen. So,
No.
like I said, it's good to have the breakup agreement, the buyout agreement, when you start, when you like each other, not when you try to get out of a business partnership.
Got it. Okay. And we're talking about taxes and keeping track of everything. Can you share with us what are some good tools that businesses can use to be able to keep their day-to-day activities?
Okay. Well, at the minimum, have a separate checking account for your business. So when your accountant asks for your information, you can print out your bank statements at least and say, here's my bank statement, and you can go through and describe what every transaction is. I had someone try to show up a couple weeks ago, and they're like, well, I'll give you all my bank statements. I'm like, great. Well, you're going to have to define to me what each and every transaction is. Is this $1,000? Is it revenue, or did you put it into the company? Because that affects your taxes. He's like, I have to do all that? I'm like, someone's going to have to do it. Somehow, I mean, do you have records that I can go by? Do you have something that I can use? So that's at the minimum. You need to be able to describe what happened. And if you do it on a monthly basis, it's a lot easier to go, what was that check for a couple weeks ago versus 9 months ago?
Yeah.
And try to figure out what happened at that point in time. Obviously, QuickBooks is a great solution. Over 70% of businesses in America uses QuickBooks. I'm a QuickBooks Pro advisor. I help set up and maintain clients at some level QuickBooks. I have clients who do QuickBooks all on their own, and they do a very good job of it, and they show up at tax time, and I'm able to use it because they've learned, they've wanted to learn how to use QuickBooks. They've wanted to learn accounting rules, and they asked me questions, and we were able to get through it. But then a lot of clients never want to touch QuickBooks, and I just provide that service to them where I download their bank information and I reconcile it and I give them financial statements so they know how they're doing on a monthly basis.
Perfect. And
what about,
go ahead, Matt.
Oh, I was just going to ask a separate question, so you go ahead.
Well, I know it can be really sticky when you have to have a business account and a personal account, but you need to keep those things separate. But most people, when they get paid, all the money goes in their personal account. So what about if they do use their personal account for business? How can you make that all balance out?
Well, if the IRS shows up, they need to see that all your revenue is entering into your business checking account. Because if it's not, they're going to go, hey, where did this $1,000 go? And they're going to want to, you're going to say, oh, I accidentally deposited in my personal bank account. They're like, okay, let me see your personal bank account. Then it's going to open a whole can of worms of they're going to start looking at your personal bank account, and then they might go, oh, what's that $2,000 deposit there? What's that? And they have every right to ask those things to make sure that you're not cheating the system.
Makes sense.
Which I know you would never do.
Of course not. No. I wasn't talking about me. I'm like, Matt. It was a friend of mine. What do you have, Matt?
So I was going to ask, what are some of the practical tools as far as keeping track of, for example, the example of going out to eat. You know, you're getting a paper receipt, right? So those are things I mean, especially for someone that's my age, we don't deal in paper anything. Like that does not. I don't have a printer or a scanner or literally any way to get a piece of paper into a computer,
nice.
Other than like stuffing it into like a hard drive of some kind. I hear that doesn't work. So what are some of the tools that people can use to do that?
Well, I was shown a cool one the other day that's actually an app on your phone, and you could take pictures of the receipt. I personally have an envelope for every year of my business. I don't have a lot of receipts, and I just throw everything in there. But I have bank account transactions that justify, that shows that I went to these places and spent this money. And then I have a Google Calendar that says I met with so-and-so at this place. So I'm able to label.
As long as you're doing most through like debit cards that are linked to your business, one of your business checking accounts, the records are there. It's just a matter of being able to properly associate it if somebody questions it afterwards and go, oh, that was for this. This restaurant expense was for this reason, to go back to the Google Calendar. And as long as those two things match up, you're good. You don't necessarily have to keep the paper receipt from the restaurant that shows everything.
Well, the more evidence, the better when someone shows up, right? But the sad thing is, if I looked at my 2012 folder, probably half those receipts wouldn't be legible at this point in time. Like, they would just be deteriorated and you couldn't see the print on them. So the more paper trail, the better when it comes to covering your tail on an audit.
And Anthony, I know we could probably do about 5 of these sessions at least, because you have so much information, and I know most of the people that I was talking to, they really are interested because it's their business, obviously. But my last question to you is, how many years should you keep all of your tax information? I mean, if the IRS comes, can they audit you for like 10 years ago, or what's your suggestion on that?
If it's a normal audit, quote unquote normal audit, 7 years is as far as they can go back very easily. They can ask for anything and everything for 7 years.
Wow.
And I mean, where was I even living 7 years ago, right? And let alone where's that stuff? I mean, that's why all my stuff's scanned and it's out there backed up multiple times on the internet and different ways to make sure I have it. So 7 years is the minimum. But if there's actual fraud, I mean, they come back for any length of time, and they really believe there's fraud involved, they can go back 20 years if they want. I mean, that's how Al Capone went down, right? Is tax fraud. It wasn't because of whatever other things he was accused of. It was because of tax fraud. So it's very important to keep those records to make sure you are, just in case. Like I said, I have envelopes with each year labeled, and it has my, all my receipts for my business and also our personal tax return stuff, just all thrown in one envelope. And that's in a file cabinet at home. So it's, well, after the year is ended, right? Yeah. So, I mean, the current year is in my office right here. But, yeah, that's what we do.
Simple.
Perfect.
I like it.
Yeah.
Yeah, I mean, and that's what I was hoping that we would be able to give folks today, is a very simple, practical way, to go forward in the new year, do things the right way, but it's something that's definitely doable on a day-to-day basis when you're out and about and trying to get clients and make sure jobs are done and all that stuff. I mean, there's so much stuff to do. We always can't do things the ideal way. Sometimes we have to just find what works for us that's good enough. But it sounds like that. I mean, that's a pretty simple system. A lot of things are so automated that a lot of that stuff is done for you. As long as you're using debit cards that are linked to business checking accounts, and then backing it up with other evidence, whether it's your Google Calendar, the physical receipt, notes, journals, logs, things like that. So it's pretty simple.
Yeah, I think one of the concerns I see a lot is there are some banks out there that you can only download transactions for 90 days. So if you're not doing it on a regular basis, if you're not collecting the bank statements on a timely manner, you might not be able to go to the and easily get those records, especially 7 years ago. So it's very important to be downloading that information to make sure you have it just in case. When I
take it on yourself. Don't assume that the bank, you can just request it from the bank at any time. Take it on yourself to make sure you have it.
Right, and even then, if you have to go and look at old check stubs, right, and those are only available sometimes for a certain period of time, and you might have to pay for all those check stubs that you have to justify. We had a sales tax audit for my fancy restaurant client, and all right, what time period are you looking for? All right, do you want it on a flash stick? We gave her a flash stick full of every single month's sales receipts. How I justified it, I have a spreadsheet that actually calculates every month, and it ties in the tax return and all the sales tax reports. I said, here you go. She's like, you are the only CPA that's ever done that for me. But she went away in 30 minutes. It was done. Everything was justified, everything was right there, and it just made it nice and easy and painless.
Awesome.
So it sounds, if you can plan a little bit and, like Matt said, take it upon yourself, don't wait till it's too late, we'd all be better off, sounds like, the moral of the story.
Right. That's for sure.
And we're coming up on a great time to do that. I mean, the businesses are slowing down. A lot of your customers have other things on their mind. They've got the holidays coming up. So, I mean, Anthony, December is a perfect time to kind of reevaluate and make sure before you go into the new year that you're not repeating the mistakes of this year.
That's for sure. And we can tell you whether you're doing things correctly or not. Because come January, we can't spend money. We can't try to collect money. We can't do anything to change your tax situation for this year. We can't say, have you thought about, giving a large charitable donation? Have you thought about, upgrading your iPhone? Have you thought about doing these kind of things that we can do if we think it's a good thing to do? It's done at that point in time.
That's a good point. So if you need to get anything in, you have a little over a month to do it for 2016. January is too late.
That's right. And if you're just looking for more information on this stuff, I wanted to just point out again, BanduraCPA.com. If you go to the resources page, that has a ton of stuff there, just free download reports and very, very good stuff. I was delving into a little bit myself. There's a lot of helpful stuff for me. I mean, we're all kind of in the small business space, whether you're a freelancer or whether you own a contracting company and you have employees, whatever the case is. He's got a lot of great resources on that page, so make sure to go check that out. It's BanduraCPA.com/resources.
Thank you. That's exactly right.
Yes, and Anthony, thank you so much. That was such great information, and really appreciate you taking time out of your, I know, very busy day to be with us. So thank you so much again. And
Glenna, make sure you get a chance to plug yourself. Don't.
Oh gosh, how could I forget that?
Yes. So how do people get in touch with you if they're looking for, and remind people again specifically what Fusion One is best at in terms of what you guys do for your clients?
Yes, I got so excited and enthralled about all of Anthony's information. Yes, I forgot about me. Fusion One Marketing, we help businesses look great on the internet. We build websites, we can help with social media, and also make sure that your business can be found when people are searching on Google. The best way to find me, or one of the best ways, is to go to fusiononemarketing.com, and I'm all over social media, so you can find me on Facebook, Twitter, LinkedIn, and all those great places. So thanks again, Matt. And Matt, thank you. I forgot you too. How could I do that? Thank you for being such a wonderful co-host and producer. Definitely couldn't do this without you, so thank you too.
Yeah, thank you very much. Well, with that, let's should we send this baby home?
Let's do it.
All right. Sure. Well, thank you so much, guys. So obviously look for us next time on Small Biz Live. We're going to have another special guest. We'll let you know more about the details on that. But every single month we're going to do about 45 minutes with an expert in some type of aspect of small business to help you grow your small business, preserve the money that you're bringing into your small business, which is what we talked about in this case, and basically just be more successful in the small business space. So look for that. Keep an eye out for us in your email inbox, on Facebook, and on Twitter for Fusion One Marketing, and the show is called Small Biz Live. Thank you so much, guys. We'll see you on the next one.
Thank you so much. I appreciate it.
Yep.